we've been watching oil today, which is slipping a bit. It's ending the strongest calendar year, though, for crude since 2016. With us now to discuss is Scott Bauer, Prosper Trading Academy Senior Strategist. Scott, it's great to see you as we close out the year for oil. It's holding above $61 a barrel, but it's sort of been, I guess, a bumpy ride to get there, right? So as we look ahead to 2020, and for example, we saw some unrest today in Iraq. Is that going to continue to be a theme going forward?
You know, there's a lot of themes, actually, and it's surprising that we haven't seen more of a pop in oil over the last couple days, given what happened over the weekend. And I think that's really because maybe this big rally got a little bit ahead of itself. And, otherwise, in the past, when we've seen an attack like this or some geopolitical unrest, we've seen a rally. So, yes, you're correct. It's up 14% this quarter. It's up 35% on the year, but we're definitely at the upper end of the range. Now, there are a lot of, positive reinforcements to say why oil should or may go higher in 2020. I actually happen to think the opposite of that, and I still think that the oversupply that we have and the shale production here is going to far outweigh the cutbacks that OPEC is continuing through the middle, at least, of 2020.
So are you saying people should avoid buying oil right now? Should they be shorting in some way some of the larger oil companies?
I would absolutely short oil futures here with a very tight stop, but this range that we've traded in basically over the last, let's call it 9 months or 12 months or so, we are at the upper end of that range. And again, the fact that we did not get a pop based on this geopolitical event that happened over the weekend, that is very surprising to me. And again, I think that people are really looking more at the fundamentals, not hopefully what is a one-off event. Maybe there's going to be more unrest, but this could be just a one-off event here. And I think when you look at inventories, even though last week's numbers had a big drawdown, we had seen big builds leading up to that. I do think that production is still going to far outweigh the global demand we're going to see in the next 6 to 9 months.
So, Scott, given that you said you would short oil, but, with a stop, what do you think then is the new range that you would be watching for oil prices?
Yeah, I think we could see a retreat back to the $56, $57 a barrel level over the next couple weeks, if not over the next month, given, just supply constraints and given what we've seen, barring any other sort of geopolitical unrest. The other wild card here, quite frankly, is what's happening with U.S. and China. If we don't get a setback, if the Phase 1 deal does get signed, as President Trump said on the 15th, and things progress here, okay, but if we start to see some unrest, some uncertainty there, all bets are off. But I really think that oil is overbought here. I would like to see, or I think we're going to see 56, 57, and that range, like we just talked about, probably still hold of about 54 to 62.
All right. In the meantime, we got 2 more weeks till the ink is dry on that Phase 1 trade agreement. So
exactly.
Some time for things maybe to move. We'll see. Scott Bauer, Prosper Trading Academy Senior Strategist. Good to see you, Scott. Happy New Year.